Accenture fell more than 18% on Thursday, its steepest single-session drop in years, after the consulting giant slashed its full-year growth outlook alongside a mixed quarterly earnings report. Quarterly revenue came in at $18.7 billion, just under consensus. But the bigger trigger was the guidance cut. Full-year local currency growth is now targeted at 3 to 4%, down from 3 to 5, with the company pointing to roughly a 1% drag from a declining U.S. federal business. This is the Milton Brief for Thursday, June 18. Welcome to the Milton Brief. Today we're looking at why Accenture fell 18.1% on Thursday, its worst single-session drop in years. The answer lies in a guidance cut and a quarterly earnings report that missed expectations. Accenture reported third-quarter revenue of $18.72 billion, just below the $18.78 billion analysts had expected. But the real blow came from a full-year growth outlook that was slashed from 3% to 5% to 3% to 4%. The company cited a roughly 1% drag from a shrinking U.S. federal government consulting business. Even though the quarterly revenue was close to expectations, the guidance cut signaled weaker growth ahead. Investors don't like surprises, especially when they're negative. The broader market had a mixed day, with the S&P 500 and Nasdaq rising over 1%, while the Dow was flat. But Accenture's stock fell sharply, highlighting the impact of the guidance cut. The drop was so severe that it became Accenture's worst single-day decline in years. This kind of move typically happens when companies fail to meet expectations or signal long-term weakness. The company's guidance cut was the main driver. Investors are now questioning whether Accenture can deliver the growth it previously promised, especially with federal work declining. The U.S. federal government is a significant client for Accenture. The shrinking federal consulting business is a major concern for the company and its future earnings potential. While the quarterly results were only slightly below expectations, the guidance cut was more impactful. Investors tend to react more strongly to changes in long-term growth outlooks than short-term misses. This kind of move often leads to a re-evaluation of a company's stock price. If a company can't meet its own guidance, it raises questions about its ability to manage its business effectively. Accenture's stock closed at $127.98 on Thursday, down 18.1% from the previous day's close. That's a significant drop, and is likely to be followed by further analysis from investors and analysts. The news was widely covered in financial media, including Yahoo Finance and Quartz, which both highlighted the severity of the guidance cut and the impact on Accenture's stock price. In summary, Accenture's stock fell sharply due to a guidance cut and a slightly disappointing quarterly report. The main concern is the shrinking U.S. federal business, which could affect future growth. Thanks for watching. If you want more in-depth analysis on market moves like this, make sure to subscribe and hit the bell. We'll see you next time. If this helped, subscribe to the Milton Brief, and I'll see you in the next one.